Welcome to Wall Street Mindset, where we turn market chaos into opportunity. In today's video, I want you to think about this. Have you ever felt like you're on the verge of a big win, only to realize the game has changed? Stick around, because that's exactly what's happening with Bitcoin right now. Picture this. You're standing at the edge of a cliff, and just as you're about to leap forward, the ground beneath you shifts. That's where Bitcoin traders find themselves today. The price surged past $60,000 recently, and it felt like we were finally climbing to new heights. But is this the leap we've been waiting for, or just another false step before the fall? Let's rewind a bit. Not long ago, Bitcoin made a significant move, breaking above the $60,000 mark. The excitement was palpable. For a moment, it looked like we were seeing the beginning of a new bullish run. We had green bars all the way to $65,000, and traders everywhere were catching their breath, thinking, this is it. The bull market is back. But here's the kicker. Beneath that surge, there was something not quite right. If you look at the charts closely, especially on the daily time frame, you notice that the rally wasn't as strong as it seemed. It was a classic three-wave corrective pattern, 1, 2, 3. And if you've been trading long enough, you know three-wave structures don't indicate strength. In fact, they often signal the opposite. Think of it like this. You're sprinting up a hill, but your footing is off. You might gain some ground, but you're not running with the strength needed to reach the summit. That's exactly what Bitcoin did. It ran up, but it was a shaky run, not the kind of impulsive move we'd expect in a sustainable rally. Now, this isn't the first time Bitcoin has pulled this trick. If you were around in 2018, you might remember something eerily similar. After Bitcoin hit its then all-time high of nearly $20,000, it plummeted. But after that fall, Bitcoin made several attempts to get back on its feet, climbing above the 21-week moving average, a critical indicator of market momentum. Each time, traders thought, here we go, the bull run is back, but every time, it failed. The market corrected, only for Bitcoin to drop even further. Those rallies were weak, three-wave corrections rather than five-wave impulses. And what followed was a prolonged bear market. Fast forward to 2021. The price hit almost $70,000, the euphoria was back, but just like in 2018, Bitcoin started to roll over. It made a weak attempt to climb back above the 21-week moving average, but once again, the three-wave corrective pattern showed up. The result? A massive drop, pushing Bitcoin into another bear market. The present. Is Bitcoin repeating itself? Here we are in 2024, and it feels like déjà vu. Bitcoin made another attempt to climb, once again pushing above the 21-week moving average and above $60,000. But if you peel back the layers, you'll see that it's following the same old script. It's that weak, three-wave structure again, an ABC correction, not the strong, impulsive five-wave move that signals a true breakout. The warning signs are there. Bitcoin failed to hold above $60,000, and it's now hovering dangerously close to support levels. The key number here is $49,000. That's the most recent low from August. If Bitcoin breaks below that level, it's a strong signal that we might be heading straight into bear territory. The bigger picture. A pattern of failure. Now, let's put this into context with past market behavior. If we look at Bitcoin's historical charts, every time it fails to hold above the 21-week moving average after a weak rally, the result is usually the same: significant downside risk. Whether it's 2018, 2021, or right now, the market doesn't reward weakness. And that's exactly what Bitcoin is showing us at this moment: a lack of conviction. This isn't just about technical patterns either. We've got the seasonal factor working against us too. September has traditionally been a tough month for Bitcoin. Historically, the market tends to struggle during this time, with more red bars than green, indicating negative returns. Think about it. Bitcoin traders in September are like people trying to swim against a current. It's exhausting, and unless something drastic happens, you're more likely to be pulled back than pushed forward. What's next? Hope on the horizon, but here's the silver lining. While September tends to be brutal, October often flips the script. Historically, Bitcoin has performed much better in October, with stronger returns and higher probabilities of gains. The seasonal pattern shifts, and the market tends to move from weakness to strength. So, if Bitcoin can hold above that $49,000 support and survive the September slump, there's a chance we could see a real rally as the market moves into October. That brings us to the key question: can Bitcoin rescue itself? It's facing a critical test. If it can break back above that $60,000 resistance and stay above the 21-week moving average, it could signal the start of a stronger trend. But if it fails, and especially if it breaks below $49,000, the risk of a deeper bear market looms large. The unveiling. The real game. Remember at the start when I asked you if you've ever felt like you're about to win, only to realize the game has changed? Well, that's exactly what Bitcoin is doing right now. The game isn't over, but the rules are shifting. The market is always evolving, and success comes down to recognizing when the script is about to flip. So, are we about to see Bitcoin break free, or are we watching it fall into the same old trap? Thanks for watching Wall Street Mindset, where we navigate the ever-changing market landscape together. If you found this video helpful, make sure to like, share, and subscribe for more insights. And let me know your thoughts in the comments below. What's your take on Bitcoin's next move? With that said, thanks for watching, and until next time.